Prepaid taxes are made up of two different types. So we have our employees' taxes and we also have provisional taxes. Employees' tax will exist if there is an employer-employee relationship. The employer then withholds the employees' tax from the amount of money that they pay to their employee every month. And then for every employer that you have, you will have to have employees' tax deducted from your salary. So if you're employed by Company A will calculate your employees' tax based on the income that you receive from Company A. Then again, if you're employed by Company B again, then Company B will then calculate the employees' taxes based on the income that you receive from them. Then it's also important for you to go and understand the definition of remuneration, employer, and employee in terms of the fourth schedule, because that's where all the rules come from. So our fourth schedule is what we look at when we are dealing with prepaid taxes. This is for both employees' tax as well as for provisional tax. So we need to focus on the fourth schedule. Okay, so an employer is someone who would then pay the employee a remuneration. And then with the employee, an employee is someone who receives or has remuneration that accrues to them, and it's not a company. It also includes, the definition also includes a person that receives or accrues remuneration for services that they rendered to or on behalf of a labor broker. A labor broker is also included. This would be a natural person who provides clients with his own employees to perform work for the client or procures work for the client. A personal service provider. This would be a company or a trust where any company or natural person personally renders the services on behalf of the company or the trust. Then also a person who is declared as such by the Minister of Finance in the Government Gazette. And then it also includes a director of a company. So it's important for us to be aware of those definitions, because that relationship is what brings about employees' tax. Okay. Then remuneration is the other definition that's very important, because that's where we will see what exactly can we calculate our employees' tax on. This would include income that is paid or payable to a person, whether it is for services rendered or not. Okay. So there are 13 types of incomes that are included in the definition of of remuneration, sorry. And then there are 16 inclusions. And then there are 4 types of exclusions that are mentioned there. So the list is quite extensive, so it's good for each person to go and look at the definition of remuneration when they are studying. So it would include your salary, your leave pay, your wages, any overtime, bonus, gratuity, commission, fee and emolument, your pension, your superannuation allowances, your retiring allowance, and any stipend. Then your specific inclusions are your annuities, your amounts that were received for services rendered, including any voluntary awards, your retirement lump sums and your retirement withdrawal benefits, your retirement lump sum from an employer, your conversion from a public sector pension fund to a private or public provident fund, restraint of trades, payments, commutation of an amount due under a contract of employment or services, 80% of your travel allowances, where if that person can prove that 80% of the travel that they will do is going to be for business purposes, then they would use 20% instead. Then also any other allowances or advance that you would have received other than your travel allowances or your subsistence allowances or allowances that are granted to public office holders. Then also the allowances that they're referring to here would be like your computer allowances, your cell phone allowances, anything of the sort. Then you would have subsistence allowances on its own. And then only if that person does not spend the night away from their usual place of residence, and then that amount would then be deemed to be paid to that person as part of their salary the month following the month that they actually received the money. So for instance, if I am asked by my employer to go to Cape Town during the month of September, but then something happens and the trip gets cancelled and I don't pay that money back, then the month following, so October would then be then that money that I received for the the subsistence allowance that I received for my trip to Cape Town that never happened will then be formed part of my my salary in October if I never paid it back. But if I do pay it back or I spent the night away from my usual place of residence, then that would not form part of my salary in October. Okay. Then we have 50% of an allowance that is given to the holder of a public office. Any excessive reimbursive travel allowance. So whatever the difference is between the rate that my employer pays and the specified rate in the Act, then that difference would be included as part of my remuneration. And then also, if my employer gives me a right of use of a motor vehicle, then 80% will then be taxable. 80% of that fringe benefit would be taxable. So then you need to use that calculation that is mentioned in the 7th schedule. So we would then determine it using the 3.25 or the 3.5 so that we can get the fringe benefit or the taxable fringe benefit on that right of use. And then we also go back to that 80% for business story. If you can prove that you're going to use the vehicle 80% for business, then you would only include 20%. In most cases, they would normally use the 80% of the taxable fringe benefit. Then also any other fringe benefits, gains, or qualifying equity instruments, amounts received in terms of a maintenance order, in terms of Section 711. So then there are amounts that are specifically excluded from remuneration. That is amounts that are paid to independent contractors in respect of services rendered, government pensions and grants paid under so that's like our normal grants that are paid to our pensioners, the children, the ones that are paid for the children, that would not form part of our remuneration. Also, any amount that is paid for reimbursable purposes, for expenses that they actually incurred in the course of employment. So if you went and you spent your own money and then your employer pays you back for that money that you paid, then that would not form part of your remuneration. Any annuity under a divorce order would not form part of your remuneration. So please, if the amount does not meet the definition of remuneration, then there will not be any employees tax applicable. So don't even waste your time continuing with the calculation. As long as there is an amount that meets the definition of remuneration, then you can go forward and calculate employees tax. So then there are terms and conditions that the employer has to meet. They need to make sure that they pay that money over to SARS within 7 days after the month end. So whenever they are done paying their salaries the following month, within 7 days, they need to pay the employees' tax over to SARS. Our employees' tax will then be used to reduce the tax payable on the date of assessment. And this is all in terms of the fourth schedule, as I've mentioned before. Somebody asked earlier on about employees' tax in one of our other sessions. Employees' tax is what we use to reduce the tax that we have to pay at the end of the year. So SARS and Treasury understood that if they did not put in a mechanism in place to collect the money during the year of assessment, come year end, no one will be able to pay their taxes. So then they came up with this employees' taxes so that they can collect the money during the year and also help people to afford paying them the taxes at the end of the year. So that's why we have employees' taxes. Then provisional tax is something that we're going to touch on in our following session. Today, we're just going to focus on employees' taxes. So provisional tax is also a method of prepaying your taxes for the year. This is for people who have more than one employer or more than one source of income. So if I have, let's say I have my day job, I have a side hustle, I sell Avon, I sell whatever else on the side, and I have rental income. So you have different streams of income. Come year end, you're only going to have declared the tax that you got from your salary, or the tax on your salary. And then when you start declaring all these other streams of income, then you also have a lot of money and you cannot afford to pay them at that time. That's why you have provisional taxes, so you can provide for the taxes during the year before you start having to file at the end or during filing season. So you can start paying it off in chunks. So you'll have your first calculation within the first 6 months of the year of assessment based on your basic amount and your or you estimated based on your basic amount from the previous year, and your estimate can never be less than your basic amount. So you always need to make sure that your calculation is more than your estimate is more than the basic amount from the previous year. And you do that first calculation, I think it would be now after August, so around September. Then again, you would do your second calculation at the end. So end of February, you'll do the next, your second provisional calculation. Then you would also have to pay the money over to SARS. If you do not pay the money over to SARS, then there will be penalties and interest as well. If you calculated incorrectly, there will be interest and penalties as well. So we will touch on all of that in our next session. I just wanted you guys to be aware of the fact that there are two types of prepaid taxes. Okay. Then now we're going to go to the calculation of our employees' tax. First, we would have to determine the amounts that are included as part of our remuneration. And for that, we go back to the definition of remuneration as set out in paragraph 1 of the fourth schedule. Then we would have our deductions in terms of paragraph 24A to 24F. There's only about 4 deductions that a person can actually have from the employees' taxes. Then from there, that will be how we determine the balance of remuneration. So we would have an amount of our annual equivalent of the balance of remuneration, excluding the annual payments. Then we would also have the annual equivalent of the balance of remuneration, including our annual payments. So our annual payments would be things like our bonuses or something that like our leave payments, that something that you wouldn't normally get every month. So if it's a once-off thing, then that once-off thing will then be included as an annual payment. So to determine our taxes on our annual equivalent of the balance of remuneration, we would then go to our tax tables. Then we would determine the tax on the tables, less our rebates, the medical and also the primary rebates. And then from there, we would get our employees tax for that month. Then if for that specific month we got an annual payment, we would then calculate our annual equivalent with or plus the annual payment separately. So you would first calculate the annual equivalent on the normal remuneration that you got. Then again, you would then calculate it on the normal plus our annual payment. Then whatever we get as a tax for the amount plus our annual payment, we would less that by the normal tax. That will then give us the tax on the specific annual payment. So for instance, the bonus, then we would get the tax on that bonus. Then that plus the normal tax that we would have paid will then be our tax payable for that specific month. But we'll do a calculation so that we can understand this a little bit better, because the theory of it is not easy to picture in our mind. Okay. So then the types of deductions that we would be able to claim, or that we could set off against the remuneration, is in terms of paragraph 2A, our provident and provident fund contributions and pension fund contributions, but these are limited to our section 11F allowance. So when you're doing your calculation, you would still apply the section 11F allowance rules in the deduction. Then in terms of paragraph 2.4b, any retirement annuity fund contributions that are made by the employee. This is if I have my own personal RAF that I contribute to every month, then I need to go to my employer and say, listen, employer, I have this RA that I contribute to every month. Please include it as part of my deductions. So that you reduce the monthly employees tax that you're paying. Or you can just leave it and then you claim it at the end of the year. But this is for employees tax. You can include it if you go and show your employer that you have that contribution. Then in terms of paragraph 2.4b cap A, any retirement annuity fund contributions by the employer. And this is limited also again to the section 11F allowances. Then the last deduction that you can claim is any donations that is paid by the employer on behalf of the employee. But this is limited to, or it cannot exceed 5% of the remuneration. And there must be a section 18 cap A certificate that is received by the employer. Okay, so those are the only deductions that you can set off against employees' taxes. Please do not allow anything else. Do not deduct any other expenses against the remuneration, because then your answer will be incorrect. Okay. Yes. Charlotte.
Hello, ma'am.
Hi.
I'm just a bit nervous. Are we required paragraph 2.4a for this section?
Are you what?
Are we required to write the sections, the section numbers?
Yes, you are required to know where your paragraphs. In this case, it would be your paragraphs, né? Because in your schedules, it's not sections, it's paragraphs. So you will have to know the specific paragraph that you are referring to.
Okay, thank you.
All right. I know the paragraphs and the sections are our teething problem, but we will remember, at least if you have an idea that it's in paragraph 2.4, that's where your deductions are, then you can at least just put down paragraph 2.4, and hopefully they will consider that as you referencing and find that as sufficient. Because even in the way that some of your suggested solutions are set out, the reference is just to paragraph 1. So maybe you can also write it like that and they will give you the mark. I'm not sure. So it will depend on the marker on the day. Okay. So let's look at an example. Okay. Okay, there we go. We are going to apply the knowledge that we have. And as you guys know, we are in an interactive tutorial session. So we will be talking through the examples. Okay. So required. So this question that we're going to do now was actually requiring you to do the employees tax calculation as well as the the provisional tax calculation. So what will happen now is we're going to just look at the employees tax portion of it. Then in our next session, we would look at the provisional tax calculation. Okay, so that will be in our next session next week. So it says to us, based on all the information provided in the question, calculate what Thuli's employees tax would be in respect of the month of February 2024. That should have been paid over to SARS by Pro Health. The background. Thuli is 35 years old, married to Jabulani out of community of property without the accrual system. Thuli is a sales representative for a large local pharmaceutical company, Pro Health Limited. She worked for her employer for the past 15 years and does not own any equity shares in Pro Health. Great stuff. So now, okay, there we go. It tells us that below are details of Thuli's total income, benefits, expenses, and contributions in respect of her 2024 year of assessment. So this is for the full year, né? So we can see that is for the full year. They tell us that she received a salary, commission, award of asset, travel allowance, annuity for her grandfather's trust. Then the expenses, she had the current retirement fund contributions, medical expenses, entertainment expenses. Okay. So the salary, what do you think? Does that form part of our remuneration? And which paragraph are we going to use to include it as part of our remuneration?
Hi, the salary will be included as part of the remuneration, and it's going to be paragraph 1 of the 4th schedule.
Yes. So we just need to make sure that we also mention that it's the definition, right, of remuneration. The specific paragraph in the definition of remuneration would be paragraph A of that definition. The way that they had structured this suggested solution is that they just said paragraph 1. So I'm hoping and praying that that is the standard that they require from you as well. Okay. So we would include that as part of our remuneration. Okay. Then they tell us that we have commission that Thuli received. Then they tell us you need to provide the specific section or the paragraph as part of your reference. Then we have a note number 1. Let's go to the note. Here it is. It says, Thuli earns commission on the sales she procures with pharmacies and health shops in the region that she covers in Gauteng. She incurs entertainment expenses in respect of the current and prospective customers when meeting with them. So what do we think? Is this going to be part of our remuneration? Yes or no?
Yes, it is included.
Thank you, Marian. And what are we basing that on? Remember, they said to you must provide them with a specific section or paragraph.
Okay, I said that the commission will be included as part of remuneration.
Mm-hmm. And
yes. It's income incurred because of her job.
And then what are you basing that on? What specific paragraph are you going to base that on?
Paragraph A.
Okay, awesome. Of what?
Of the definition of
Okay,
remuneration.
perfect. Okay, so if they wanted you to mention both the section and, because this says or, I'm assuming, so if they wanted you to mention both the section and the paragraph, then they would be requiring you to go back to section 1 of the Income Tax Act. We're going to look at the definition gross income, specifically paragraph C, that speaks to us providing a service and also receiving income for that service that we provided. It also includes the commission income that we would have gotten for the services rendered. So we would have to mention paragraph C of the definition gross income in section 1. Then paragraph 1 of the 4th schedule, specifically looking at paragraph A of the definition remuneration. Thank you. Okay, so we're not gonna, I should have mentioned this in the beginning when we started. We're not gonna divide the amounts as by 12. So the easiest thing is to always work with the information that is given to you. In this instance, they've given us the amount for the full year. So use the amounts that they've given you for the full year, then take that amount and divide it by 12 at the end. So not to confuse yourself or to get the incorrect answer, because the more you do the maths, the more it also leaves you somewhere in between. So just use the figures that have been given to you. Take the full year's amount. In this case, they've given you the annual equivalent. So you don't have to first go calculate the annual equivalent. You've already gotten it. Work with that annual equivalent amount. Okay. Cool beans. So then they tell us that we have an award of an asset. Here they also want us to provide a section and as well as the paragraph reference. Okay. Then they don't tell us the actual amount that was received. They refer us to paragraph, to note 2, sorry. They tell us that Tuli received a year's supply of health products that cost her employer 25,000 Rand. Its market value is 35,000 Rand. She received the health products on the 29th of February 2024, and this is the anniversary of her 15th year at Pro Health. How would we then treat this award, and what amount are we going to use as whatchamacallit, the value, or yeah?
Yes, I think this will be included as remuneration, as a fringe benefit. And then there's a section, I don't remember which section, that 5,000 can be exempt from that total amount since it's
Okay.
an hour.
Okay. Okay. I see. So you are looking at it as a long service award.
Yes, that's what I think.
Okay. Anybody else? Any takers? Would this be part of your normal monthly remuneration, or would this be part of your annual payments?
Annual payments, because it's once off.
Thank you. So you are correct, Charlotte, by saying that. And then what value do you want to use? Are you going to use the market value, or are you going to use the cost that the employer paid?
I think the market value minus the 5,000.
Okay. And Margaret also concurs with you. She also says market value. Okay. So you are correct in mentioning the fact that it's going to be part of our annual payment. So this will then be part of our second calculation, when we work out the annual equivalent, including our annual payments or the bonuses and once-off payments. And then also the fact that you mentioned the 5,000 Rand long service award portion as well. You're also correct in that. But then when we look at our provisions of the 7th schedule and section 7 cap B. Section 7 cap B will then be our variable payments, and there it will help us to determine that we actually use the cost of that her employer paid and not the market value. So we would have used the 25,000 Rand less the 5,000 Rand. So then the amount that we would include as part of her remuneration would only be 20,000 Rand.
The variable payments, so over and above the fact it's an annual payment, it's also a variable payment. Please explain that. Is it possible for it to only be an annual payment and not be a variable payment? Or is it always variable and annual?
So our variable payments are things that happen once off. So it's the same, it's not something that will consistently be there. That's why they are called variable payments. So things like your bonuses, and things like this, like your long service awards, those are your variable payments. They're things that don't always happen, and that's why they're called variable. They are also the same thing as your annual payments. The term variable payments is used for specifically your section 7B. When we are looking at it in our 4th schedule or in employees' taxes, we would then refer to it as part of the remuneration. So we just call it annual payments for employees' tax, but for income tax, normal treatments, we would call it our variable payments. Travel allowance, okay. How would we treat our travel allowance of 5,000 Rand? Let's look at the note. It tells us that Tuli received a travel allowance from Pro Health of 5,000 Rand from 1 February 2024 to 29 February 2024, as she had to use her own car to travel for business. She also owns a motor. She owns a motor vehicle that cost her 250,000 Rand, including 250,000 Rand, including VAT, on the 31st of May 2022. She kept an accurate logbook, which indicates she drove a total of 4,000 kilometers in the month, of which 1,250 kilometers was for business purposes. Tuli kept no records of actual traveling expenses incurred. So how would we then treat our travel allowance? Any takers? Is this going to be part of our annual remuneration excluding the annual amount, or is this going to be part of the annual amount calculation?
I think it will be included in full.
Why would you say that?
Well, if I look at the remuneration, it's part of the money that she received from the company. So I would think that, but I'm trying to see where it says that in my book, but I can't find it.
Okay, awesome. Okay, so this is an example of when reading is gonna get the better of us, right? I also had the same problem. So this amount was only received for 1 month. So, oh, sorry, there was another hand. I just missed you. Please go ahead and speak.
No, it's fine. You may continue. It's okay. I'll speak.
No. Just go ahead. Don't be scared.
No, I was also gonna say it's included. But I think I was also considering whether it's looked at on an annual basis, but it was for 1 month. But also another thing was that she had used it for personal She used a company vehicle, she got the allowance, but only a smaller fraction went towards business purposes. So she couldn't only include 20%. So I was going to say 80% was going to be included, but then I think I'd also just missed that only 1 month thing.
Okay. Thank you for the 80%. Thank you, Marion. So I was also going to touch on that just now. That's perfect. So in this case, this would have been part of our annual payment and not the annual remuneration excluding annual payments, because this was only received for the month of February for the year. So had it been that this was a travel allowance that she had been receiving every single month for the full year, then it wouldn't be an annual payment calculation. It would have been included as part of our annual remuneration, excluding the annual payments. But now in this situation, they tell us that it only happened once. So it's one of those things that didn't happen regularly. It's something that happened once off. So maybe it's because she started getting the travel allowance only in February. Then she would only start getting it for the full year in the following year. So then it would then be part of the normal month-to-month calculation. But in this case, she only received it for the 1 month. So we need to include it as part of annual payments. And we also need to remember that only 80% of that 5,000 Rand would be included as part of her remuneration, not the full 5,000 Rand. Okay. Are we comfortable with that? And we would then look at paragraph, where is it now? Paragraph, hi, Tebogo, just now. Paragraph C, cap A, that of the definition remuneration in paragraph 1 of the 4th schedule. So then the next issue is an annuity from her grandfather's trust of 120,000 Rand. How would we treat that 120,000 Rand?
It would go into the annual calculation.
Why?
It's a once-off. Is it? It says 120. It didn't say that it's paid monthly.
Yes, Tebo. We'll come back to you, Marion.
Is this? I don't think this one we need to include it because it's not part of a remuneration. Since it is received from a grandfather's trust.
100%.
I don't think this.
You are 100% Tebo. So remember we said there needs to be that employer-employee relationship so that the amount that you received must form part of your remuneration. In this case, this does not form part of that employer-employee relationship, number one, and also the fact that it's an amount that the employer wouldn't have known about, that annuity that she received from her grandfather's trust. So this would not form part of our remuneration. And had it been a different circumstance of her receiving that annuity, it would have formed part of the remuneration. But in this case, it's not from the employer-employee relationship that you would have had. Okay. Does it make sense, Marion?
It does. I'm sorry. Just to take it a step further, it will form part of an income though.
Yes. Definitely.
Yes. Okay.
Yeah, but it would be part of the income, but not part of this remuneration. Okay. Cool beans. So then we have our expenses and contributions. They tell us that the current fund contributions are in note 4. Let's go there. Note 4, they tell us that Tuli and Pro Health contributed 40,000 Rand and 30,000 Rand respectively in total to a local provident fund during the 2024 year of assessment. You may assume that her remuneration as defined in terms of the 4th schedule to the Income Tax Act, amounted to 650,000 correctly determined for her 2024 year of assessment. Why are they telling us about the 650,000 Rand? Why is this important to us?
I think when we calculate 27.5%, it's either 350,000 or 27.5% of the remuneration total.
Yes. So this will help us in terms of our Section 11 cap F calculation, because we are still limited according to the Section 11 cap F allowance rather in our deduction, so we cannot exceed that allowance in terms of Section 11 cap F. So the contribution of 40,000 and 30,000 rand, will we include both as her contribution, or would we limit it to just her own contribution?
We include both.
Yes, 100%. So we would use the 70,000 as our contribution for the year, and then do our limitation in terms of Section 11 cap F between the 350 or the 27.5% of remuneration, or 27.5% of our our taxable income. Okay. Oh, bananas. So that one is something that we already know how to do. So it's not something new. It's not a new concept. It's the same thing. Then they tell us she also had medical expenses. In paragraph 5, they say to us, Tuli contributed 50,000 rand and Pro Health 40,000 rand in total to a local medical scheme she is a member of for the entire year of assessment. Pro Health is aware that Tuli is a member of a medical scheme and agreed to take into account for employees' tax purposes. Tuli is the main member, while Jabulani Andile, her son, Lesia, her mother of 65 years old, who has a disability as defined, are all registered as dependents on Tuli's medical scheme. Tuli incurred additional qualifying medical expenses of 33,000 rand for Lesia during the year of assessment, of which Pro Health is not aware. Okay. How would we use this in our calculation? How would we use this information in our calculation?
I think we need to first calculate Section 6A credits.
Yes, true, but you skipped a step. Oh, you skipped a step before you get to your tax credit. Before you get to your tax credits, what do you need? What else is important in this information? And they kind of give you a clue because they ask you to provide a section or a paragraph.
The rebates based on the age.
Okay. Not quite. Somebody else wants to guess? Yes, Mary.
Can I just try?
Yes.
Isn't it the contributions?
Correct. You and Notisile have the same answer, which is correct. So the 40,000 rand contribution that is made by the employer on her behalf would be treated as fringe benefit, and that is in terms of paragraph. Hold on, I'm going to give you the correct paragraph. No. Now I'm also struggling to find the paragraph. Paragraph B, cap A, the cash equivalent of any fringe benefits and gains. No, paragraph B of the definition remuneration of paragraph 1 of the 4th schedule. So that would be included as part of your remuneration. So the 40,000 Rand would also be included as part of your remuneration, as well as the 30,000 Rand contributions as well for the retirement fund contributions. Okay. Then going back to Charlotte's answer, this would also be important for tax credits, our medical aid tax credits in terms of section 6. So we first need to work out the normal section 6 cap A, medical scheme fees tax credit. Then we also need to work out our additional qualifying expenses, the tax credit in terms of section 6 cap B. What would we include in that calculation? What would happen with the 33,000 Rand? Would we then use that amount?
No.
33.3% would have to apply because we already said that there's a disability for one of the dependents.
Okay.
So I think it would be adjusted accordingly.
Okay. But why? Somebody said no before you said your answer, Marian. Who said no and why?
It's me. I think I didn't understand the question. I thought you were asking about the qualifying expenses, the 33,000.
Yeah.
Oh, okay. So I was answering that it won't be included because the employer is not aware of it.
100%. Tsepo, what did you want to say?
I wanted to say the same thing.
Okay, great. So because the employer is not aware, they cannot give you something that they don't know anything about. But you will be able to claim that, well, you'll have that tax credit only when you go and you file at the end of the year, because you would be aware of that information. But right now, because your employer is unaware or not aware of that information, they cannot go and make that calculation on your behalf. So had it been that she went and declared that information to the employer, then it would have been a different case. Then the employer could have included it as part of the calculation. But because she didn't go and declare it to the employer, she cannot include, or the employer cannot include that 33,000 Rand. Okay.
I think, I think I overlooked that they are aware of the membership, right? As per the first part.
Yes.
Blah, 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 blah. And that is the actual expense that they're not aware of. So the total amount. So
okay. So we go back to our reading thing again. It's not fun because that's how we lose out on the marks. We need to make sure that when we are reading, we highlight the important things for our answer. Okay. Let's see, is there anything else? Then they tell us the entertainment expenses. Here you must provide a section or a paragraph reference. They tell us it's in note 1, that's 50,000 Rand. So in note 1, they told us that she incurred entertainment expenses in respect of current and prospective customers when meeting with them. Can they claim this expense? Is this going to be included as part of the deductions? Yes or no? And why?
I think, but entertainment expenses, because it's work related, then I think we include it.
Okay, Marian said it's reimbursable. Okay. Okay, somebody else want to guess? Remember in the beginning, I said to you guys that the expenses that you can only claim are these ones. No other amounts can be taken into account. You cannot claim anything else. If you do not see pension fund contributions, provident fund contributions, retirement annuity fund contributions, or donations that are made by the employer on behalf of the employee, don't even entertain it. Move on with your life. It's not going to be allowed as a deduction. There is no provision in terms of paragraph 2.4 that allows any other expenses. These are the only ones, or these are the only deductions that you can claim when you're determining your employee's tax.
Janelle,
Yes.
can I ask about the entertainment? So
Yes.
what section reference are we going to give? Because it's not allowed according to section 2.4. So which section are we going to provide?
Okay, so paragraph 2.4 of the fourth schedule doesn't give us any deduction for the entertainment expenses for employees' tax. Then looking at section 23M of the income tax says that we are not allowed to deduct the expenses for employees' tax. It's not part of the remuneration. It's not part of the balance of remuneration deductions that we can claim in terms of paragraph 2.4 of the fourth schedule. That's what you can mention. So this is the solution that was provided for you guys for this question. This is how that they wrote it. So they're not very specific on the paragraphs for the fourth schedule. As you can see, they just say paragraph 1 of the fourth schedule. So if that's the standard that they give you, then I believe that will be the standard that you will be marked on as well. So they tell us that the salary is included as part of section 1 of the gross income definition, paragraph C, and also paragraph 1 of the fourth schedule. The 272,000 Rand, the commission, is in terms of paragraph C of the gross income definition. And then again, paragraph 1 of the fourth schedule, there you would have gotten 1 mark. Then you include the 590,000 Rand and you would get 1 mark for that. The annuity from the grandfather's trust, it's not pro-health remuneration. So you would get a mark for that, for saying that it's not remuneration from the employer. So you would include 0. The Provident Fund fringe benefit, that is in terms of the 7th schedule, paragraph 12D, as well as section 1G of the definition gross income, paragraph I, of the definition gross income, and then paragraph 1 of the fourth schedule, and that's 30,000 Rand. Then again, the fringe benefit for the medical aid payments, that's also included as part of paragraph 12A of the 7th schedule, and section 1 definition gross income, paragraph I. And then for the fourth schedule, paragraph 1 of the fourth schedule, that's 40,000 Rand. So here you would have gotten a mark for mentioning the sections and again the amount. So this is just to show you how the marks were allocated in the question name. Then the entertainment expenses. Yes, Margaret?
I just wanted to confirm, do you need to mention all of the sections to get the 1 mark?
In this instance, yes, because they said to you, provide the section. I don't know why they use slash, but slash paragraph references. So you would have had to provide both the section and the paragraph reference.
Okay, thank you very much.
All right. So you will be guided by your question. That way you'll be able to determine how to include it. Okay.
Yeah, I've noticed my reading skills aren't that great. I always mess up when I read the question.
Don't worry, we all have that same flaw. I think it's like a human nature kind of problem. That we all face that. That's how we lose the marks, because we read too fast because we want to get to the answering, but we don't read to understand what the question is actually asking us. So we are already like answering the question. Okay. All right, awesome. Then they tell us the entertainment expenses. This should have actually been under so this is the expenses part, right? The entertainment expenses, they mention section 23M, where it tells us that you're not allowed to claim entertainment expenses. And then also it's not a deduction for employees' taxes. So it would not form part of your balance of remuneration deductions. So that you would get 1 mark for that. And then that is 0. So then our annual remuneration, excluding the annual amount, just before we calculate our pension funds and provident funds, is 932,000. Then less our retirement fund contributions, also limited to the Section 11 Cap F provisions. We would take our employer amount, which is the 40,000 plus Tuli's contribution of 30,000 rand. So our contribution is 70,000 rand, limited to the 27.5% of the 932,000 rand. And also you would have used your 350,000 rand or the taxable income before the deduction, okay? Then the actual contribution would be less, so you would use the full 70,000 rand as the deduction. So here our annual equivalent of the balance of remuneration, excluding any annual amounts, would be 862,000 rand. Okay. Now we need to go and calculate the tax on this amount to see what our normal tax would have been for the amounts that we get on a monthly basis. Yes.
Sorry for interrupting.
No, it's fine.
There's this 650 they gave us, remember on the question? That they said as the remuneration.
Let's go back there.
Fund calculation. On the note.
Yes. So I'm actually assuming that this would have been our yeah, let's go back there. They tell us that you may assume her remuneration is 650,000 rand for the 2024 year of assessment. Then we also went and calculated our own one, and we used the 932,000 rand, and they gave us a mark for that one and not for the 6. I wonder why they did it like that. If it was me in the question, I would have used both the 932 as well as the 650. Yeah, I'm not sure why they used the 932, but let me go back and check it again as to why they used this one and not this one. Then when we have our session next week, then I will mention it. Why is it that they didn't use this one? Okay, is that okay with you?
But according to your understanding, which one is
this is our remuneration that we've calculated. I would have used the remuneration that I've calculated as the remuneration amount.
And then the note,
the taxes,
disregard the note.
I think maybe they wanted to say this would have been our taxable income. I'm not sure. I would lie to you. I'm not sure why they sometimes they do it to confuse us and get, so I'm not sure why they put it there. I would have used my calculation because it makes sense in my little brain, because that's the remuneration that I got. And the steps say I can use either taxable income or the remuneration. So my remuneration is that one, so I would have used this one. And I would have gotten my answer. I would have gotten the mark for it.
Sorry, if regarding the retirement fund contributions, the remuneration number, wasn't there a number given with an assumption that it was calculated correctly? So I'm just confused by the 932.
Yeah, that's the same thing that Charlotte was referring to.
So they'll give either one. I just want to confirm that they will.
No, I don't think it's always going to be the case. In this case, they gave you an amount. But at the end of the day, you're still going to be calculating your remuneration amount. Okay, I will go back and find out why is it that they used the one that we calculated and ignored the 650. And then when we have our session next week, I will give you an answer. I'm not gonna say something and then the next thing is wrong. So I'm gonna come back to you on that one as to why we used the yes. Okay, awesome. I'm so sorry if I'm gonna say your name wrong. Timave.
Hi, it's
Hi.
Temave.
Yes.
I could be wrong, ne? But
Mhm.
as far as I know, when you calculate the limitations, so there's the limitation of the 350,000, right?
Yes.
And then it says, or the greater of the remuneration or the taxable income, of which
Correct.
in this instance, the greater one was the annual remuneration. That's why they took that one.
So remember, now we are calculating remuneration. Then they also gave us remuneration in our question. The question said 650 is the correctly calculated remuneration.
Yes.
But
So
in the solution, they gave us the remuneration that we have calculated.
yes, so I'm saying, remember the 27.5%, ne? You take the greater of remuneration or taxable income.
Yes.
Yes. So I'm thinking the annual remuneration is the greater one between the two.
So you're saying that this is our, remember, remuneration is defined, ne? Taxable income is it would be, so taxable income is not always the same as remuneration. Some things would form part of our remuneration. Some things would be part of taxable income, but they would not form part of our remuneration definition. So sometimes you would find that taxable income is actually greater than remuneration. So in this instance, they gave us the same thing. They said remuneration is 650. And then again, we are saying this is our remuneration that we've calculated, the 932. You understand what I'm saying? So they gave us the same thing. So they gave us the remuneration, the 650,000. And then again, we are saying that this is our remuneration as the 932, the 932. But I understand what you're saying. I get the logic of what you're saying, Timave.
Can I add on that?
Yes. Who's that? Charlotte.
In this section, we are not in any way talking about taxable income. We're only talking about the income that the employer knows about.
Yes.
So in this calculation for retirement fund, the taxable income will not feature because the employer is not aware of all the taxable income of this person. So that's why this calculation, you'll only include the remuneration and not compare the maximum between taxable and remuneration.
But then but then now we are saying that we are changing what section 11 cap F is saying to us. Section 11 cap F is the one that tells us that we take the greater of the 27.5 the greater of the 27.5% of the greater of the taxable income or the remuneration. So in this instance, we would say we are looking at only what the employer has paid. So we wouldn't have had any other amounts that the employer didn't know about.
Which will be included in the taxable income.
Oh, income, yes, that's
so
true.
How
So the
taxable
you're
income.
right, you're right what you're saying, Charlotte, because the employer wouldn't have known about any other thing that they didn't pay to you. They would only know about the amounts that they paid to you.
Which
So it's
is
only
remuneration.
based, yeah, it's only based on the amount that the employer gave you from them. They won't know about other income. So for instance, that annuity that you got from your or that Tuli got from her grandfather, they wouldn't have been aware of that. So they wouldn't have included that as part of their calculation.
Yes, yeah, that's what I'm saying. We are not saying the amount is zero. We're just saying the amount is unknown for taxable income.
Correct, yes. Let me see something here on Silk. Silk says employees' tax is calculated monthly, but the specified limits in section 11 cap F deduction apply annually. In order to calculate the allowable deduction that an employer can take into account on a monthly basis, he must therefore divide, okay, the 350,000 by 12, okay, fine. Base the 27.5% in the section F 11 cap F deduction on the remuneration paid by the employer in that specific month. So an employer can only base his calculations of the section 11 cap F deduction to be taken into account for the employee's tax purposes on the information available to him. Due to a lack of information, an employer will consequently not be able to do the calculation of the 27.5% of the taxable income limit, and will also not be able to do the calculation where the taxable capital gain must be taken into account. The employer can similarly never take any balance of unclaimed contributions into account when the Section 11 cap F deduction is calculated for the employee's tax purposes, and will only take the current contributions into account. So they are just confirming what we just said now, that we cannot take into account things that we don't know. So we wouldn't have had the taxable income for the year. Okay. So we are back to asking ourselves why 932,000 and why we didn't take the 650,000 rand. Yeah, but I will go and I will check, or I will find out why we use 932 instead of the 650,000 rand. Timave, is that still the same hand, or is there something else that you want to say?
I think it's the same one. I'm sorted. Thank you.
Okay, awesome. All right. So we will touch base on that 932 650 issue again. But if I think about it now, we would always want to take the amount that's more beneficial to the taxpayer, because no one will ever want to use the lesser amount when we're doing our calculation. So we always want to give the taxpayer the benefit when we are doing our calculation. So it actually makes sense that we would use the 932,000 instead of the 650, because the 650 would give us a lesser amount instead. So we would use the amount that's more beneficial. But I will go back and confirm. But thinking about it from that stand or that logic, that we always want to give the taxpayer the better amount, we would use the higher amount instead of the 650. So when we come together again, we will just touch base on that 932,000 rand issue. Okay, is that fine? Okay, cool. So then, now we've worked out our annual equivalent on the balance of remuneration excluding our annual amount. Now we need to go and do the calculation for the annual amount. So in most instances, this is where we would, oh no, we need to do the tax calculation. That's why it didn't make sense now. We need to do the tax calculation. This is our annual equivalent for the year, for the normal amounts that we get. Now let's go do the tax calculation. So we would take our normal tax per the tax tables, In this case, this person would fall into the 41% tax bracket in terms of Section 5 of the Income Tax Act. So this is per the table, the 251,258 plus 41% of the 862,000 that we got in as part of our calculation here, less the 857,900 as per the tax table. That would then give us a normal tax of 252,939 Rand, less our primary rebate in terms of Section 6 of 17,235 Rand, less our medical scheme fees tax credit of 6 in terms of Section 6 Cap A. So we would have the two, the main member and the first dependent, then the two dependents afterwards at 247. And that will multiply by 12, and that would give us 14,640 Rand. Then less additional qualifying medical expenses, tax credit in terms of Section 6 Cap B. Excuse me, this would not be allowed for employees tax because Pro Health was not aware of it. Had it been that Pro Health was aware, it would have been a different situation. But because they were not aware of it, we would not have anything here. So our employees tax on the annual equivalent would then be 221,064 Rand. Now to get our tax per month, we would take our annual equivalent divided by 12 months. That would give us 18,422 Rand. So this is how much we would deduct from, I think it's Thuli's salary for the month of February. Okay. So that this part is our normal tax calculation. This part we know how to get to 100%. Now we're going to do the calculation on the annual payments that we received, or the annual amounts that we received. So now we take our annual equivalent balance that we worked out at the top. So this is our normal income for the year, which is our 862,000 Rand, plus our travel allowance in terms of Section 81B, and also paragraph 1 of the fourth schedule. Paragraph 1 of the fourth schedule is the one that tells us that we need to only take into account 80% of the 5,000 Rand that was received for the month of February 2024. So this was only received for the month of February. Had it been that it was received every month, it would not have formed part of our annual payments or annual amounts received. But because it was only received once off during this year, we would include it as part of our annual payments. Then again, we had our annual reward, which is our variable payment in terms of Section 7B, where it tells us that we would use the amount that the employer paid for that, for those health products, which was the 25,000 Rand. That is 1 mark, and then less our 5,000 Rand because of the long service award, so that we would go and look at paragraph 5 of the 7th schedule, and that we would include as 20,000 Rand in our calculation. So now we have our total annual equivalent of remuneration, including the annual amounts, and that gives us 886,000 Rand. Okay, now we need to go and work out the tax on this amount, on the 886,000 Rand. And here we would then go to our tax table again, and we would still fall under the 41% tax bracket. And then we would get the amount of 262,779, less our primary rebate, less our medical scheme fees credit in terms of Section 6 Cap A of 14,640 Rand. And then again, there wouldn't be any Section 6 Cap B allowance credit because the employer wasn't aware of it. Then our employees tax on the annual equivalent would then be 230,904 Rand. Employees tax for that month will then be the 230,904 divided by 12, then we would get the 18,422 Rand. Then we would, okay, so this is the one that we got up there, ne? Sorry, I just said the wrong thing. So we would take our annual equivalent less the annual equivalent of our normal income that we got up there. That would give us the tax on the bonus or the annual payments that we got of 9,840 Rand. So we take our employees' tax per month that we've already calculated up there of 18,422 plus the employees' tax on our annual amount of 9,840 Rand, and that would give us our employees' tax for the month of February 2024 of 28,262 Rand. Questions? Discomfort? Yes, Abel.
Good afternoon. Thank you.
Afternoon.
I do appreciate for the lessons. I know after we have calculated everything for the normal tax tables, less primary rebate, and also the less medical scheme fees tax credit, we have to go to less additional qualifying medical expenses, as we have already said. I mean, as we have already indicated. But when you calculate the additional qualifying medical tax credit, which amount we're supposed to start with? And I know you have just taken, but I just want to know if we have to take them sequentially, or you can just do it the way you get it. Thank you. I appreciate.
Okay. Wait, before you go, Abel, what do you mean? Are you saying with reference to the expenses that we have, or the calculation of the section 6 cap B calculation?
I think both of them, the calculations and with regard to the expenses we have.
Okay, so it will depend on the person that you have, right? And the age and whether there's a disability or not. Okay.
Okay.
Then the steps, let me get the steps. I don't know it off by heart because the system calculates it. So let me get it for you. Section 6 cap B. Okay. You just threw a wrench in my life right now. Let's go to the calculation of the additional qualifying medical expenses. So what we would then do is we first calculate our section 6 cap A credit, right? Then we would multiply that by 4. And then we would, so we take our fees that we pay to our medical aid less the 4 multiplied by the 6A credit, then whatever that is, plus any of our qualifying medical expenses, that would then give us an amount. Then we take 7.5% of that of our taxable income. And then we minus that from the total that we just got from our subtotal plus our medical expenses, our additional medical expenses. And then whatever that gives us will then be 25% of 25% will then be our medical tax credit. So let me write it down. I think it would be better if I write it down.
Dineo,
yes.
Can you see this is giving you more work because now this credit talks about the taxable income. So that means you need to find out for us also on this point what taxable income are they talking about? Because so it's more homework for you.
Oh, I'm never gonna sleep now. Never gonna see my babies. Okay. I'm trying to look for it in our employees tax section and not just in the other side. Not the normal calculation, so that I can do it for you. Abel, is it okay if I go and I write the steps for you and then send it as part of the pack for today? And then
Yes, yes, I
is
will
that okay?
appreciate. I will
Perfect.
appreciate.
So
Yeah, I
you will be
get them
able to,
later.
okay, awesome. So you'll still be able to get the calculation, your normal
Yes,
section 6 cap B calculation.
yes,
And
I do
then
appreciate.
okay, perfect. Then I will
Mm.
also include, because Charlotte is like telling us the truth now, that we also need to
Okay.
know
Thank you, Dina. Thank you.
okay, awesome. Great stuff. So we can quickly discuss this. So it says here, paragraph 9(6) of the fourth schedule says that the employer must deduct the section 6 cap A medical tax credit from the amount to be withheld or deducted by way of the employee's tax, both when the employer pays the medical scheme fees or when the proof of payment of those fees has been furnished to the employer. So that's for the section 6 cap A tax credit. So the employer needs to be aware of it, right? Then they tell us that the employer must also deduct the additional medical expense tax credit in terms of section 6 cap B 3A 1 if the employee is entitled to the secondary rebate, meaning he or she is 65 years or older. So in this case, the person has to be older than 65. This means that they will then take 33.3%, multiply that by the total contributions paid, less 3 times of the section 6 cap A to be credited. Then that.
How does disability affect tax calculation?
Okay, so the normal tax calculation, then the person would then qualify for those additional tax credits. That's what we are discussing now, your 6B. Normally, for most of us, we wouldn't get that additional tax credit because of the fact that the way it's structured, it's to exclude most of us from that tax credit. So if the person has a disability, then they would be able to have that additional 6B, section 6B tax credit. So the way you calculate it will not be the same as for someone without a disability. So you would then benefit from the calculation that the people who are, I think, older than 65 would also get. So when I send this calculation to you guys, I will include that as well. I will show you the normal income tax versus the employees tax calculation. So what we are actually saying now, in this instance, for employees tax, the employer would only do the calculation if the person is older than 65, and they would use the 33.3%. Instead of doing it the way that I was mentioning just now for the normal employees tax, the normal income tax calculation.
And then if this person is not a member of any medical aid but has a additional medical expenses,
the employer, we go back to our question, is the employer aware of it? Because if you wouldn't have paid those things, the employer wouldn't have paid that expense on your behalf. You would have been the one paying it. So in this case, they are saying you're only entitled to that credit or that deduction in terms of if you are older than 65 years old. So you're saying they are telling us that you're not able to go and claim that that deduction if you're younger than the 65 years old. So you wouldn't get the deduction. That's what we're saying.
Are you asking me? I thought you were saying that the deduction, this person won't get the deduction.
Yes.
Because if they are below 65.
Yes.
So if they're above 65 and they are not a member of any medical aid, they will qualify for Section 6B.
No, remember, it's saying that if the employer is aware of those things, then they can claim those expenses, ne? But if the person doesn't furnish the employer with those things, then they cannot they cannot give the person that allowance or that deduction in terms of paragraph 96B. So if you could have claimed the rebate in terms of section 62B, the normal medical expenses credit that applies, then you would then be able to claim that expense if the employer is the one who pays those expenses, and the employer doesn't, or if the employer doesn't pay those expenses, then you need to go and give them the proof. If you don't give them the proof, then they wouldn't know and they wouldn't give you that benefit.
No, it's not, I don't have a question. I just have maybe a suggestion. That maybe for the coming sessions, you could send us the questions so that we attempt it on our own before we come to the class.
Okay, that's fine. So we can, this was the weekly, the exercise under the weekly classes on your MyUnisa website. So next week we will attempt the part B of that weekly exercise, weekly classes exercise.
Okay, thank you. I'll check it out.
Awesome. So next week when we come together, we will be going through our provisional taxes. And yeah, so that's what we will then be doing.
Can I suggest the opposite? You know,
okay.
Today's lesson was so, it was challenging, and it got us to think. So if you don't know what questions to expect, I think it's training us for in the exams when we get there, because the question is going to be new.
Okay.
So I think this technique for me today, it worked because it challenged me to think really hard. So I think I like it when it's like this for my side, because for the other classes, the Tuesday ones, they gave us prior, so we practice. So I think this is the push that we need towards the exam. We get a new question and then we just start thinking and interact. I think this works for me.
Okay, so you can, okay, here's the suggestion. Those who learn by being surprised, like Charlotte, you can rather not attempt the question. Those who, like Tepo, want to attempt the question prior to the session, you can try that. Whichever one works for you guys. We all have different learning styles, so we want everyone to benefit in the way that they learn. Is that okay with everyone?
Yeah, one for Tepo is fine. I like the one for Tepo. We have to prepare first.
Okay, so each person will do what feels good for them. Okay. All right. So you guys understand where this all falls into our bigger scheme of things, right? The employees' taxes and the provisional taxes, how this will affect our tax payable at the end of the year when we have to go to SARS and submit our returns. Speak to me, Marian. How does it affect us? Because you said thumbs up.
So I'm just thinking about the taxable income framework, right?
Yes.
You would obviously have gross income, have all the deductions, calculate the tax, then obviously do the rebates and tax credits, medical tax credits, etc. And then this is where this would come in as, I think, one of the later stages before foreign dividends. I think. Sorry, I'm just thinking off the top of my head. So it would be after you've calculated your medical credits and rebates and everything, that total will then lead to you having to deduct this employee's tax from that. And then after that, I think it's dividends. There's something that is an
The
additional
withholding tax.
Yes, the withholding tax after
Yeah.
that, and then you would get your final figure.
Okay, so this will then be used when we're determining our tax payable or
Yes.
tax
Refundable.
or our tax receivable from SARS, right? So if now our employer paid too much tax on our behalf from our employees' tax calculation, then SARS needs to give us back our money. And if they've paid too little, then we need to go and pay our taxes back. So you guys are the champions of telling people that, guys, you won't always get a refund from SARS because your employer, if they only have a salary, your employer would have paid the correct amount of taxes on your behalf. And that's a good thing. So you're not getting cheated during the year by your employer who pays too much on your behalf, and then you're getting a refund because there's nothing else. So you won't always get a refund. You will either have the exact amount of money and not get a refund, which is great stuff. We move on with our lives. Or we would have a refund because other things happen during the year that our employer is not aware of. Maybe we have a retirement annuity that we are contributing by ourselves without our employer, or what else? We have a trade that the employer is not aware of, and that trade is maybe giving us a loss. So we have overpaid our taxes because we actually lost money because of the trade that we took part in. So this is why we are actually doing these exercises, so that we can determine what we should actually be paying on a monthly basis, so that at the end of the year, we don't end up owing SARS and SARS doesn't end up owing us. You don't want your money sitting somewhere else. You want the money in your hand right now, every month. Okay.
Sorry, as maybe a fun exercise or something to just connect the theory we're studying to real life situations. I recently pulled a payslip of mine. And I think because I've been kind of learning a bit about these things, not a bit, but I've been learning about obviously all of these elements. I think the payslip started looking different to me in terms of the considerations that are being made. So, and then also when I was filing my tax returns this year, when I got that last income statement, I suddenly saw the breakdown as we're learning in the book in terms of taxable income and all these deductions. So I think if just to my colleagues, if you want to get kind of a real perspective, just go look at your tax return and then just see where all of those deductions are coming through, your employees' tax as well. It just makes it real. I think sometimes we theorize too much and we need to kind of do real life implementations of what we're learning, and also just realistically, we are all living what we're learning here because we all get pay slips and we all get tax deducted. So as I've been connecting, I think I've also been very disengaged because although I'm in South Africa, I actually work more global, so I really don't pay attention to what's happening in South Africa. So this is the first time I'm actually connecting my payslip and my taxes and everything as it relates to South Africa income tax. So yeah, that's a fun thing to do.
Yeah, that's very true. Thank you for that, Marion. I think we want to make tax seem like it's something that's so far away, but it's actually a real life thing. It's our everyday life. And the more we think about it realistically or practically, the more it becomes real to us and the easier it becomes. The more you engage with your finances and you start seeing, well, actually, how does this really affect me in real life? Then it becomes easier even when you are doing the calculations here in your studies. So yeah. Okay.
And thank you so much for taking your time and being with us for the past 2 hours. And Dineo, thank you for your time, and we appreciate everything that you're doing for the student. Thank you, guys.